Hey everybody, I hope you're doing well. I'm Jacob, and in this video I'm going to share my dividend income through the month of March in 2024. Can't believe it's 2024 already. The year just seems to be going by so freaking quickly. I like to show you these dividends to be completely transparent with you guys, and also really to show you what an actual portfolio can truly generate. I'm a big fan of financial freedom, so achieving that through investing in things like stocks is one way that you can generate the passive income so you can live the life that you truly deserve. Now, before we hop into the dividends, let's just take a quick peek at the portfolio here. So overall, the portfolio right now, it's valued at about $35,400. We've earned total dividends so far of $2,800, and the overall market gain, this includes dividends and capital gain appreciation, that's just over $8,000, which equates to a total money-weighted return of about 63%. And if we look at the performance over the past month, we pretty much ended where we started. So we actually started off going up pretty well, almost $1,000, but then the past couple days here in March and early April, we had a few bad days, so that really brought us back to just about where we started. So overall, no big gains, no big losses. And just taking a peek at some of these pies here. So in M1 Finance, pies are essentially just a group of stocks in your portfolio, and you can customize this however you please. This is how I do it. I like to do it by sector. Overall, a pretty good mix of ups and downs. We had tech down about 3.4%. Finance was up just under 3%, so those almost balance each other out. Consumer was down almost 5%, so that didn't perform that well. And we can just take a peek at some of the holdings in here. So yeah, over the past month, you have Costco being down over 7%, McDonald's pretty much the same. Nike had a pretty bad month, down 10%. But then you get into a sector like energy, and you have EPD up 7%, ExxonMobil 14%. That's pretty impressive. So overall, a pretty even mix of ups and downs, which is why it's good to spread your eggs over multiple baskets, just so if one sector performs poorly in a given time frame, you have others to balance everything out. All right, so now let's hop into the dividends, and we're going to start the month off with Aflac. They brought in $14.02. So a pretty hefty dividend there. I do have a fair amount invested within Aflac, and their dividend yield isn't that high. But what makes this company so good, at least from a dividend perspective, is that they've been able to increase their dividend by 10% annually for the past decade. I believe this past year it was only 5%, but even still, to have double-digit dividend growth over the past 10 years, in my opinion, that is pretty impressive. And I say it a lot, but you don't always want to invest in the highest dividend yielding companies, because even knowing they pay a high yield, because while they do pay a higher dividend yield, generally they're not able to increase that year after year. And many of those companies aren't always the most stable in their dividend payments anyways. So after that, we got $6.18 from Johnson & Johnson. Then we have $2.40 from Eli Lilly, big pharmaceutical company. ExxonMobil, I just showed you guys they had a great month of March, and they paid out $3.54. 3M, this is a company that I've held on to for quite some time, and I haven't added anything to it, but I haven't sold it off either. They've been going through a ton of lawsuits. The overall price of the stock has gone down quite a bit, so I'm just in a holding pattern on this one. But this month, they brought in $3.98. Microsoft is next. $2.03 is what I got from them. And honestly, this is a company that I can see holding on to for my entire life if they continue to keep doing the things that they're doing. I mean, when you look at them, they have a pretty big moat in terms of the technology. I mean, almost everyone uses a Microsoft product. They're investing a ton of money into AI. And overall, I see a ton of growth potential with them. Energy company, Consolidated Edison, they paid out $1.20. Then we move into Stag Industrial. This is a REIT. They pay out monthly, but this month they paid $2.67. Everyone's favorite fast food chain, or favorite to hate, is McDonald's. and that is $3.36. And I'll be honest, I'm not the biggest fan of fast food chains either. But when you look at McDonald's, they just seem to do everything right. They have a good business model. I like their marketing. They have a pretty strong global presence. If you've ever been to a McDonald's in a foreign country, there's a lot of things that they actually do a lot better than they do here in the United States. And overall, just a company that I think is good to hold, at least for me. And they paid out $3.36. Next is Realty Income Corp, another monthly paying real estate investment trust, but they brought in $6.10. Then we move into an ETF. This is Vanguard's high yielding dividend ETF, VYM, and $11.48 is what I received from them. They generally pay a little lower at the start of the year, and then as the year ends, like in December, that's when they pay a much higher dividend yield. So this is a little bit lower than last quarter, but overall a fairly good payment. Next is the Home Depot. They paid out $4.82. Then we move into another ETF, and this is actually a monthly paying ETF, SPHD from Invesco, but they paid out $6.75. And then BlackRock paid out $7.86. And if you do follow the crypto markets, BlackRock has taken part in a Bitcoin ETF, and there's been a lot of inflows into that ETF. So I guess if you're out there and you're looking to invest in some alternative assets like crypto, you can do it through BlackRock's ETF if you wish. And that's going to be interesting to see as the crypto market starts to pick up, but something interesting to follow there. Then we got $12.64 from another Vanguard ETF. This is VTI. And so rather being focused on the S&P 500, VTI is focused on large cap, mid cap, and small cap companies. So there's, I believe it's over 2,000 companies in this ETF. Waste Management paid us out $2.29. And we got $6.33 from Brookfield Infrastructure Partners. It just came in a little weird. But with that, that's going to be our dividend income for March. And the total comes to $97.65. So compared to this time last year, we were at $92. So just a small little $5 increase there. Over the past year or so, I really haven't invested too much into this portfolio. Just had some other things going on in my life. Getting married, buying a house, investing more into the crypto market. But overall, very happy where this portfolio is headed, and I do plan to keep investing and increasing that investment here. And so that's actually going to wrap up the first quarter within 2024 as well. So we got about $248. And just looking at the yearly wage, so this is just based on the most recent 3 months. The annual wage is just under $1,000. That puts us at $82 per month. And if we look at this as a daily paycheck, that would be about $2.72. So overall, nothing too crazy there, but it is really cool to see that every single day this portfolio is generating $2.72 in completely passive income. And through the power of compound interest, that is going to grow much, much higher. So that is going to wrap up the video. If you guys do want this template, I'll share a link in the description, but you can just click on File, make a copy, and then you can copy this into your own Google Drive if you want to use it for your own investment tracking. Thanks for taking the time to check out the video. I hope you enjoyed it. If you did, drop a like and consider subscribing if you want more content from me. So thank you all so much. Take it easy, and I'll catch you in the next one.